Good morning. It's Tuesday, December 9th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So after 6 straight days of ETF growth, gold and silver, they fell as bond yields pushed higher, with traders looking beyond the Fed's 89.4% chance of an interest rate cut tomorrow for clues for monetary policy into 2026. So they leaned to two more interest rate cuts in 2026, and that's down from three signaled about a week ago. It was Kevin Hassan. He's a leading candidate to take over the Fed chair. He said it would be irresponsible to lay out a plan for interest rates over the next 6 months. And he really emphasized the importance of staying data dependent and focusing on the economy and things like that. So looking at silver overnight, you do have silver futures tacking on about 1%, up 63 cents at 59.03. You look at that contract high, 59.90 on December 5th. Well, the overnight high was about 45 cents off from that at 59.45 and a half. So just an observation here that I saw more silver call spreads traded according to the Bloomberg Terminal Option Strategies report overnight. We saw the Feb 8085 call spread trade at about 1,400 lots in a series of small blocks that follows that trade that was made last week. Now, remember, that's not a recommendation. It's just an observation that we're looking at. Now, the silver market is dealing with the aftershocks from that historic shock short squeeze. 1 month leasing rates, which represent the annualized cost of borrowing the metal in London, remained elevated around 6%, even after the record amount of metals here flowed into the world's biggest silver trading hub. These flows, they have put other centers under pressure. So you look at Shanghai's inventories, they are near the lowest level in a decade. So the key supports in silver include that December 4th low, 56.85, down to about 56.50, with significant pocket support around 55 to 54.50 and trend support at 52.87. That's most likely raising up. And then also the 50-day moving average at 51.05, which is also most likely increasing. You look at gold futures, they are edging higher overnight, up about 0.4%. That's up $16 at 42.34. The high of the overnight session, 42.42. The low of the overnight session, 41.97. Most likely just clipping some of those small stops right around that 4,200 level, but looking at areas to add here that is a level of support. Now, key levels on the gold besides that 4,200 mark is 41.38, and then additional support near the 50-day moving average at 41.24. So you'll get the broad picture in the markets here. The stock futures, they are flat to slightly higher. You did have some positive news from NVIDIA here, some fluctuations back and forth because the devil is in the details. And this is traders, they are looking ahead at some of those major event risks that are going to take place here tomorrow with the Fed meeting and then Oracle's results. So you look at the S&P 500, the NASDAQ, both little changed here as of 5:25 a.m. in Chicago time. U.S. stocks, they may be more volatile, though, after tomorrow's Fed meeting, after other recent decisions, because of the fact that you have diverging views among some of these Fed officials, with the Bloomberg option data showing an implied move of about 0.7% in either direction on the U.S. equity markets. So globally, central banks, they've started to tilt more hawkish. You're seeing a lot of stagflation take place globally, rising inflation, slower growth, and what that's doing is that's pushing up some of those yields. And what we're seeing in the US is that the bond yields, we are seeing a steepening in the curve. Now you look at some market insights, because the Russell 2000 has really been performing well recently here in the small caps after that one washout we've seen just recently, but sentiment among US small businesses, they did increase in November, largely due to a surge of optimism around the sales outlook. So you get the NFIB, that's an organization. It's the National Federal of Independent Business Optimism Index. It rose 0.8 points here to a 3-month high of 99. So it's 15% of the owners they anticipate will see higher sales over the next 3 months. And that's the largest increase here since the start of the year. Now you look at interest rates here, because of the fact that that 10-year sits up at about 4.16%. The overnight high was 4.18. It's been almost a breakout on 10-year Treasury yields. You see the CME's Fed Watch tool, they got about an 89.4% likelihood that the Fed will cut rates by about 25 basis points tomorrow. We will have the JOLTS jobs data here for October at 9 a.m. Central Time. And then we look at what some of the FX and the risk rundown shows is that the dollar is flat at 99.05, the euro at 116.43, that's flat. We went over 10-year Treasury yields. The VIX here edging slightly higher here, 1765. Bitcoin coming off from about 92.5 yesterday to about 90,500 today. you look at the S&P gamma exposure, well, you got positive gamma indicating lower range of volatility. That expected range on the S&P 500, 68 seems like a psychological level of support. 6950 seems like pretty stiff resistance here. You go to Europe and Asia, European stocks, they were flat. You got Asian stocks, they slipped as investor sentiment turned a bit jittery here ahead of the Fed meeting, with caution rising around the central bank's future policy direction here, and I can understand that. The MSCI Asia Pacifics fell about 0.6%, snapping that 5-day winning streak. You go to the ETF flows here. Well, they bought gold, palladium, but they sold silver and they also sold platinum. So the exchange traded funds, they added about 6,000 troy ounces of gold to the holdings in the previous session. Those are up about 17% year to date, sitting at 97.9 million ounces. And that's the highest level since October 24th. Something to note is that hitting that highest level, we haven't seen much of an input into additional ETF buying in the gold market. It's been more consolidation, range bound, more of a trading affair. Same thing with that platinum market as well. A lot of times these markets, they wind up before they get a new catalyst, and then they extend that move in one direction or the other. You look at silver, they cut about 0.6%, and that year-to-date total ETFs, they rose 18%. So they cut 4.76 million ounces of silver yesterday, and it was the biggest one-day decrease since, coincidentally, October 24th. So you want to look back on the charts of what happened around that, and I anticipate that that's going to be when we either made our contract highs or we had some big washout in that market. So the gold-silver ratio does sit at 71 to 1. So going to be some volatility. This is kind of the calm before the storm, I would say, on a lot of these different markets. People are going to want to start to look at, hey, maybe am I a little bit overweighted? I anticipate some trimming. Or people are also looking at the yield curve, which indicates that the Fed and the way things are pricing out is that we should see some accelerated growth here into 2026, but really that question around 2 or 3 interest rate cuts and where that terminal rate lies is what's kind of moving the needle. Had a lot of traders picking up platinum call spreads yesterday. They're also looking at some of the outside markets like soybeans breaking down here through some critical levels of support, cutting through that $11 mark here. A lot of traders were picking up put options with the anticipation that futures would pull back because of the fact that you had all this information coming out from Chinese buying, but no real follow through to the upside on prices. A lot of it was baked in the cake right away. You needed to see surprise upswings on those levels of purchases from China in order to get prices extending higher. And then you look at the cotton market, a lot of people looking at that as well, as prices have been in a multi-year here sell-off and they're starting to flatten out to the upside, looking for any kind of catalyst here to bring prices upward. So you guys got any questions, shoot an email, info@bluelinefutures.com. Remember, futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.